Hello and welcome back to Dukascopy TV. I'm Ben Jones. It's the first day of the trading week, so of course it's time for another edition of the week ahead. And joining me on the line to discuss what may shake up the markets over the next few days is Alex Smith from First National Bank. So Alex, coming up in the week, we have manufacturing and services PMI data for the UK, as well as a speech from the Bank of England Governor tonight. What topics do you think Governor Carney will focus on?
I think it must be borne in mind that the speech tonight by Governor Carney will be made in his capacity as the chairman of the Financial Stability Board, which is an international organization that works with the various financial authorities in the various countries to set international standards and promote effective regulation and supervision of the financial sector. So I think what he's going to focus on there is macroprudential supervision, the challenges that the global economy faces in terms of financial stability and the progress that has been made since the global financial crisis. So I don't think he's going to talk too much about monetary policy per se, but more about financial stability and the challenges and progress that has been made there.
Now, tomorrow the Eurozone unemployment rate figures will be released, with the interest rate decision later on. Firstly, do you expect any change in the unemployment rate? And is there any expectation of a change on Thursday?
Yes, I think we might see a very minor improvement in the unemployment rate, perhaps down to about 11.9% for the Eurozone. We have started to see a couple of bright spots in terms of some decent improvements, particularly from Portugal, where the unemployment rate has come down quite a lot. So also looking at the PMI data that came out last week, there was an indication that employment creation is starting to come through in the Eurozone. So we'd hope to see a minor improvement in the unemployment rate. With respect to the monetary policy decision on Thursday, that's certainly a very interesting one, given the very low inflation print that came out earlier today, only 0.5% for the Eurozone, which was a little bit of a surprise, I think, for most analysts. And that will certainly intensify the pressure on the ECB to act. However, I don't anticipate that there will be an interest rate cut at this meeting, based on the fact that the GDP or the growth data out of the Eurozone is starting to look a little better, and the fact that this dip in inflation is likely to be transitory. So I think what we'll probably hear is just a further commitment from Mario Draghi saying that if things do take a turn for the worse, the ECB is prepared to act. But I don't think we will see any action out of them at this meeting.
And finally, on Friday, we have non-farm employment change and the unemployment rate for the US. Both of these figures have seen some improvement recently. Are you expecting this to continue?
Yes, absolutely. In fact, I think we'll probably see an even stronger print on Friday than we saw last month, perhaps somewhere around 200,000 jobs created, and perhaps even a slight drop in the unemployment rate for the US. The data out of the US recently has been very, very strong and has been indicating that some of the weakness we saw earlier this year is probably due to weather conditions, and now that those weather conditions have improved, we can expect to see a pretty strong performance out of the US economy in the coming months.
Alex, thank you very much for talking to us today. That's all we've got time for, I'm afraid. Thank you very much for watching, and stay tuned to Dukascopy TV throughout the week, as we'll be covering all of these events and more. Bye for now.